I'm Don Tapscott,
And I'm Alex Tapscott.
and this is What's on Tap for this week. Alex, so much going on in the space. There's a lot on tap. Why don't we start with just some of the big events and announcements of this week? So Google finally created a blockchain group. This is so odd, trying to figure out to what extent are these leaders of the old paradigm just slow in embracing a new one, or to what extent are they keeping things kind of confidential? You think about Amazon, like a huge percentage of enterprise blockchain applications run on platforms on Amazon Web Services, but most people wouldn't think of Amazon as being a player in the space. But they seem to be taking it seriously. Google, on the other hand, has been a giant conundrum. Why have they been so slow to embrace this? And I think that, that they're about the Internet of Information. They're about Web 1 and Web 2, and Web 3 is just a new paradigm. It's hard for them to wrap their head around it. Other stuff that's happening, big money pouring into this space. There's this privacy-focused blockchain secret network announces $400 million in funding. And this is I guess it's a fund that's putting money into applications and startups and capabilities on their platform. But 400 million these days, that's like chump change. You track this better than I. What's going on in terms of big investments?
Yeah, that was an announcement of an ecosystem fund, which is basically a fund that exists to finance and help develop projects that run on certain kinds of blockchain platforms, right? Whether it's this thing, Secret Network, which frankly I'm not all too familiar with, or Solana or Avalanche or one of these more well-known kinds of platforms. And it's part of a bigger trend of just an absolute wall of money, a tsunami of money that's being thrown at the crypto space. It used to be when we first started, I think it was Polychain was the first VC fund to raise, a decent amount of money to invest in these projects, and it raised $10 million. And I think Andreessen Horowitz was half of that at $5 million investment. And as part of that, they actually ended up getting a big piece of the GP, which is the thing that actually earns fees from the fund, because it was hard to raise $10 million from a crypto fund 4 years ago. Well, fast forward to today, and Andreessen Horowitz just announced that they plan on raising $4.5 billion.
It's incredible.
Which, just pause for a second, because that's bigger than almost any VC fund, period. $4.5 billion to invest exclusively into crypto projects. And they're not the only ones that are putting a B in front of the amount they want to raise. FTX, which is one of the largest exchanges and certainly the fastest growing, having gone from sort of 0 to number 4 place in the rankings in a couple of years, just announced a $2 billion fund as well. And there's some other ones. Katie Hahn, a former partner in Andreessen Horowitz's crypto fund, is planning to launch her own fund and raise $900 million. And there are lots of other examples of this. So,
she's partnering with Tamika Tillman, who was with the New America Foundation, went to Andreessen Horowitz, and now, I guess, Tamika and Katie have spun out the separate new fund.
That's what it looks like. Yeah. So what's going on here? Well, there's a couple things. You can make the argument that this is the logical conclusion of a multi-decade bull market in risk assets. That when you get to the very end of one of these cycles, you can raise enormous amounts of money for the most early stage and primitive kinds of, or early stage and speculative kinds of entities. And certainly that's what critics of the industry would like to say. Another alternative would be that this is a new paradigm, and that, this is capital that's chasing the biggest growth area in the economy and probably will be for the next 2 decades. I think probably the reality is somewhere in between those two different poles. I think that, to be sure, there's a lot of FOMO going on that's allowing valuations in the private markets for crypto companies to hit all-time highs, eye-watering valuations for pre-seed or seed stage investments into concept companies. And I think that probably has something to do with the fact that there's so much money that's being thrown at this. But I do think that the reason is that where else are you going to put risk capital to work? Like, where else is there an opportunity to participate in, a massive wealth creation event in the public markets? Valuations for public stocks, Web2 companies, the FANG companies is already trading well above historical norms. Other stocks don't look particularly cheap. Bonds are at risk of devaluation because of rising interest rates. Commodity complex is doing well, but that can't satiate the demand of all investors. And so I think that this VC market is benefiting tremendously, and that crypto is the greatest beneficiary of all that.
Yeah. So I see that as an aside, that you were speaking at Bitcoin Miami, and I gather you did this virtually. I didn't tell you this, but I had a couple of friends call up and say, "Hey, I see Alex is going to be in Miami. Could you introduce me? Would like to meet with him." Anyway, so how did it go, and what was your talk about?
I wish I could have been there in person. It's the North American Bitcoin Conference. I've gone in previous years. It's an awesome event put on by Keynote. Really tremendous event. Mark Cuban was there, the mayor of Miami, Francis Suarez, as well as other big time speakers. And I was on the agenda as one of the afternoon main stage sort of keynote talks. Unfortunately, it was virtually. I wish I could have been there in person. But the talk was about basically a new taxonomy for crypto assets and a new understanding for how crypto and DeFi specifically is going to transform financial services. I only had 15 minutes for this talk, so it was a lot to squeeze into a short period of time. But I was able to talk about the taxonomy that we've developed for digital asset revolution.
Yeah.
I don't know if you can hear that. My dog's very excited about this. He's barking in the background. A new taxonomy for digital assets, which we developed for Digital Asset Revolution, a new book, which is going to be released soon by Barlow Books, part of our series on blockchain and the enterprise. And I also talked about DeFi specifically, and basically did sort of a high level state of the union on what has happened in the past year. And I wish I could share some slides, but I know that most people listen to this in audio format. But just to give you some perspective on this, DeFi users in January of 2019 were 0. In January 2020 were 100,000. In January 21, so exactly 1 year ago, about 1.25 million, and the end of the year at 4.5 million. So it tripled again in 2021. Total value locked in DeFi protocols grew 10x to $250 billion. NFTs had basically negligible volume in January of 2021. And even in March of 2021, which is the month that everyone was like, wow, this is going to be, this is such a huge number. It was like 700 million. And looking at the chart here, it looks like, January of this year is set to exceed even the highest month of last year in the sort of $5 billion range. So from $0 to $5 billion, we saw huge growth at the protocol level. So the value of so-called layer one protocols like Ethereum, Avalanche, Binance Chain, and so forth grew from 150 billion to $600 billion in a year. And we saw, stable coins growing from about $25 billion in value to over $160 billion in less than a year. And even recently, we saw PayPal announcing they're planning on launching their own stablecoin. So part of the talk was really to just say, let's just take a pause for a second and look at just what exactly has occurred here in the past 12 months. It was an absolutely transformational period for this whole industry, and a sign that, if anything, adoption and growth is accelerating, not slowing down, which is what typically happens later in the growth cycle. So, I think it was well received. I think people were happy to see the talk supported by some really compelling data, and I think it went quite well.
I was just watching a video put out by Bloomberg about DeFi, and they had some pundit on there saying that it's a well-known statement about software eating traditional business models. But I'm here to tell you, software is going to, or blockchain is going to eat the banks and Wall Street. And I had to have a chuckle because that, of course, was the title of your TED Talk from what, 6 years ago?
Yeah, 5 years ago.
Yeah.
Geez, almost 6 years ago this fall. Hard to believe.
Wow. And this is, if you think about it, 6 years ago, digital blockchain revolution was in the can, on the way to the printer. So 6 years, a lot of water gone under the bridge. That's for sure.
Yeah.
Back then we talked about different consensus mechanisms, and this issue of proof of work and its energy use it's not only not going away, it just keeps becoming a bigger deal. Now, good on you launching a Bitcoin fund where the carbon has been written off. But the latest brilliant move by a regulator comes from Eric Therdine, vice chair of the European Securities and Markets Authority, and he wants to ban proof of work mining in Europe. This is an interview he did in the Financial Times. The solution is to ban proof of work. Proof of stake has significantly lower energy profile. So, as with all things, this one is a little more complicated than I think the good Mr. Therdine suggests. But do you want to comment on this?
Yeah, it's really weird that regulators or anyone in government would want to choose a technology standard. It's like saying ban Betamax. I mean, it makes no sense. In the end, proof of work mining is the system that's used by Bitcoin and a few other chains, but the vast majority of new blockchains that are in development are proof of stake networks. And that is a very different mechanism to achieve consensus, which is how new blocks get added to a blockchain and how transactions get processed. So it's very important, how this sort of component. But regulators should not be picking favorites. They shouldn't be choosing technology standards like that. And I think that his comments betray just a fundamental lack of understanding from a lot of people about proof of work mining. It's true that proof of work uses a lot of energy. It's also true that the industry itself is disproportionately skewed towards renewable energy. And it's also true that proof of work mining can actually be a huge economic boom to countries that embrace it. And we're seeing this happening in parts of the United States and Canada, where most of the mining that's moved from Kazakhstan and China and elsewhere has relocated. And in some instances, proof of work mining can even be used to help regulate energy grids by providing sort of like a rough and ready source of power consumption at the location of a power source, like a renewable energy source, for example. And so, I think just in general, let the market decide should be the goal here. The market's already said that for a lot of blockchain applications, whether it's a lot of DeFi stuff or NFTs or stablecoins or whatever, that proof of stake is actually super useful. So if that's where the market is, allocating capital and that's where the growth is occurring, then let it, so be it, right? This is something where governments should take a hands-off approach for sure.
I kind of wish they had banned Betamax, actually, because I ended up buying a very expensive device. But no, I think point well taken.
Yeah, you mentioned our discussion about proof of work and proof of stake in the book. At the time, proof of stake was kind of a theoretical thing, right? This idea that you could build a blockchain that actually worked in a different manner. There actually wasn't a proof of stake network at the time when the book came out, but we correctly, I think, identified that it was possible and that it could be an area of growth. Another thing that we talked about in the book was how blockchain and crypto assets could help empower people who are unbanked or maybe not fully included in the economy. We described the prosperity paradox, right, where we've got rising wealth but also rising inequality, and where a lot of people in the global economy are being left behind. So I happened to notice the other day that there was some really interesting surveys that have been done recently, and I think that crypto assets in particular have received criticism or have been mischaracterized as being, the playthings for the rich, for privileged Westerners, for tech bros or whatever. But actually the surveys paint a very different picture. One by Morningstar said that while 10% of fully banked people have access to or own crypto assets, 37% of underbanked people do. And many people are not fully unbanked. They're typically underbanked, which means they may have access to some financial services, but not the full suite that we consider like a traditional banking relationship. And the situation is even more stark outside of the US, where, in Nigeria, 30% of people have owned Bitcoin. And in El Salvador, there are more Bitcoin addresses than bank accounts. Like we're seeing this playing out in real time. So I'm just wondering if you could respond to that now that the data is coming in that suggests that this is really starting to play out.
Yeah, I mean, I actually just had a conversation with a friend this week who's sort of skeptical about all of this and who was saying, yeah, well, isn't this just something for the rich? And it is kind of an ironic conversation because you'll remember that we talked about that this technology could actually be key to achieving prosperity. And this was the theme of my TED Talk too, that we have, for the first time in modern history, there's a bifurcation of wealth where the economy is growing, but prosperity is stalled. There's wealth creation, but the middle class is shrinking. And this paradox is a big problem, and ultimately it leads to very bad things in society. Not to mention that it's unfair and unethical. So the solution to solving this problem is the redistribution of wealth, right? Tax the rich and so on. Well, there may be a role for some of that. I mean, maybe Jeff Bezos should pay some taxes, but there's a whole new perspective that this technology enables, which we called the pre-distribution of wealth. That rather than redistributing wealth after it's already been created, we make the economy more democratic and we link people more directly to wealth creation, and we ensure that the creators of value benefit from the wealth that they create, and all kinds of ways to do this. Um, we can bring 1 billion people into the global economy almost overnight with this technology if we have the will. We can stop the remittance or ripoffs, close to $1 trillion of the global diaspora. People have left their ancestral lands and they're now sending money back home, and they're being charged like 10% or 20% by Western Union and others. And the irony of that is that it, there are no cross-border email payments. The sending of money around the world should be as easy as sending an email. But we can do all kinds of other things. We can ensure that that value creators like musicians are fairly compensated through blockchain platforms. I was talking this week to a guy named Christoph Straub, who's the CEO of globalrockstars.com. It's a music platform that's attempting to do that. And we can democratize global finance. Now, there's one radical idea, because right now the financial industry is the biggest industry in the world, and it sucks up a whole bunch of value in the economy. And these are the masters of the universe, and they're the people who are the highest paid, typically in our economy, other than entrepreneurs. And we now have an opportunity with DeFi to do a lot of what banks do on networks and through software. So those are just a handful of the things that can be done. I mean, we can create a new halcyon age of entrepreneurship where, because of blockchain, it's easier to start a business, to raise funds, to find the talent and resources necessary, and we can build decentralized models of value creation, ultimately, DAOs, or distributed autonomous organizations. So this view is not only dead wrong, it's not supported by data, and the alternative point of view is that this technology enables us as humans to build a very different kind of economy. Now, the technology is not going to solve the prosperity paradox. Only humans can do that. But as we said all along, blockchain gives us another kick at the can to sort of rewrite the economic power grid and the old order of things.
Hear you. And I think that's absolutely correct. And I think that, it's important to point out what's been achieved, but also what remains to be done. I mentioned the DeFi numbers at the beginning. We're at 4.5, 5 million total DeFi users. That's a pretty far cry from a billion, right?
Yeah.
So there's, you want to acknowledge that the progress that's been made, but continue to, make the fight happen, right?
Yeah. Alex, I think our time is up. Just some announcements. Sovereign Wallet and MetaMui joined the Blockchain Research Institute as pioneer members this week. We're releasing for our members some new research, the promise of community-owned prediction markets. And this is really a juicy piece about why decentralized crypto networks are inevitable and important to society, apropos to our previous conversation. Also, Platform Revolution, our new book, is now available on Amazon. And while we have a second here, let me, for those of you who are watching on video, you saw it here first. This is the cover. It's not yet on Amazon.com, but it's the cover of the new book edited with a preface, an extraordinary contribution, if I may say so by you, Alex. Digital Asset Revolution, how blockchain is decentralizing finance and disrupting Wall Street. And I'm hopeful that this will be the big book on DeFi, the Web3, and digital assets, as you were previously discussing, because there's so much mud on the windshield. I just saw another piece today where some guy was referring to all this as shadow banking, a term that Canada's national newspaper, a real leader in understanding all this stuff, the Globe and Mail, is also used in a big article. In fairness to the Globe, they publish some good stuff too. But so hopefully this book will bring some clarity to the market. We're driving hard to get it published. Should be out in about 3 months, and it'll be available for pre-order on Amazon soon enough. Anything else from you, Alex?
Oh, that's it. Thanks for the plug of the book.
Well, as I've learned over the years, you gotta be prepared to sell a book if you've written a book.
I hear you.
A good book, you gotta muscle it. Anyway, take care, and we'll see you all next week.